Hi, everyone. My name is Jim. I'm an equity research analyst covering the auto, gaming, and renewable energy sectors at RHB Research. In this short podcast, I'll briefly touch on the auto sector outlook, and then I'll dive right into the EV landscape here in Malaysia. So we recently upgraded the auto sector to overweight, and we upgraded UMW and MBMR to buys. Basically, we've turned bullish on the sector premised on four factors. Number one, the orders on hand are more resilient than we expected. Lots of companies have plenty of orders on hand right now. Number two, the new launches this year and the upcoming launches should continue to drive the orders. Number three, interest rate hikes are nearing its end, and we found that the higher interest rates have not really increased the monthly installments for car buyers. So consumers are still able to obtain the financing that they need, and that they're able to afford the financing that they need to buy cars. And the last and most important reason is greater earnings visibility. And this is driven by the existing orders as well as the new launches. The easing supply chain constraints also help because now companies can better plan their production and their deliveries, and therefore allowing them to translate their orders into earnings. Here is a table summarizing our stock recommendations. Our top picks right now are UMW and MBM, as UMW owns a 38% stake in Perodua, while MBM owns a 20% stake in Perodua. So that we think that they will benefit from Perodua's strong earnings this year, which is supported by the large orders that they have on hand. We also like MBM for their 10% dividend yield and potential for special dividends as well, given their recently strong earnings as well as forecasted strong earnings. Now let's dive right into the EV landscape here in Malaysia. So here are some of the existing EV models at the moment. And here are some of the models that will be launched this year or are recently launched. So some of these exciting names include the BMW i7, i5, the BYD Seal, Dolphin, and the E6, Toyota's first battery EV, the BZ4X, Peugeot E2008, the Volvo C40, and the Nissan fully electric Leaf. In the survey that we held on our Facebook group, we asked you guys whether you are considering buying an EV or not, and this is the poll results. It seems like many of you are still not ready to buy an EV just yet, and it's not really a surprise. And we thought of some reasons that why Malaysians may not be ready to buy EVs just yet. So some of the key reasons are shown here. I'll go through them one by one. So the first one would be that EVs are simply too expensive. Now, the upfront costs of EVs are generally higher than their gas engine peers, but research has shown that the cost of ownership and cost of maintenance is generally lower for EVs compared to their gas engine peers. But nevertheless, the high upfront cost is enough to put people off from buying EVs. And the key reason why EVs are so expensive is because of the high lithium-ion battery costs. And we can see here on the chart, although the battery prices have been falling over the last decade, it has increased in 2022. And it is forecasted to increase again marginally in 2023 before easing again in 2024. So I guess that means we should not expect EVs to become any cheaper this year, unless there are cheaper offerings from existing and new EV companies. The second reason is range anxiety, which basically means when EV owners worry about not being able to get from A to B because they fear that the car may run out of power before they reach their destination or before they reach the next charging point. The third reason would be insufficient charging infrastructure. So the picture here on the left was taken in the UK last December after Christmas. Basically, you see all the EV owners queuing up to charge their EVs. This is what happens when there are more EVs than there are chargers. In Malaysia, there is still a lack of charging infrastructure, but as we can see on the screenshot on the right, the government is planning to increase the number of charging points in the coming years. But we think that there should be incentives as well to encourage private corporations to install more charging infrastructure as well. The fourth reason would be long charging times. And this ties back to the picture just now where because of long charging times, everyone was queuing up to charge their EVs. If it didn't take long to charge the cars, the queue would not be a thing. Basically, at this moment, most of the EVs take about half an hour to charge from 0 to 80% on a DC charger, which are the big chargers that you would find along the highways. And it generally takes about 8 hours or more to fully charge your EV using an AC charger, which are the wall boxes that you would have at home or in your condominium or in shopping malls. Thankfully, there is a Chinese EV company called NIO trying to solve this problem by developing swapping battery technology, where basically you drive your EV into one of their one of the stations, and then the machines do the rest of the job. The machines then swap your almost empty car battery and they replace it with a fully charged battery. That way you don't even have to wait to charge your cars. Now, over the last decade or two, there have been many new EV brands popping up. And so globally, in the EV space, competition is starting to heat up because not only are existing car companies competing with each other, they are now competing with these new EV brands as well that are trying to steal the EV market share. But in Malaysia, the competition is not as hot as it is elsewhere just yet. Despite the entrance of some of these new brands, such as Aura Good Cat, Linkbox Box, as well as BYD. Because in Malaysia, we can see that the consumers just aren't ready to adopt EVs just yet. And the local brands, Proto and Proton, likely won't have any battery EVs over the next maybe 3 years or so. Now, in terms of EV-driven stock recommendations, we like Sime Darby and Burmas Auto because Sime Darby by far has the most EVs among the listed auto companies here in Bursa, and Burmas is right behind Sime Darby with their own EV offerings. I hope to see you at our daily RHB Morning Cuppa briefings by our RHB Research and Economics team every business day before the market starts, where we go live on our RHB Morning Cuppa at 8 Facebook group at 8 a.m. for more investment insights, market and economic outlooks, trading ideas, and more. So that's it from me. Thank you very much and have a good day.